Morning, Barb.
So, good morning, good morning, good morning, good morning. The, okay, so this is my time to talk.
Yes, it is. Tell us a little bit about what you wanted to share with us today.
Okay, very good, thank you. I know that there's a lot of information out there regarding some changes in the current situation with the COVID virus, both with the for individuals as well as small businesses. So I wanted to talk a little bit, kind of give you an overview about that, because we could probably spend 2 hours on that stuff. And then also any, possibly any questions or issues that you may have. And hopefully you'll be able to walk away with at least a resource to look up some of the information, or be just as confused as us accountants are. So, first of all, I know that first and foremost that we as accountants have been getting questions about oh my gosh, when am I going to get my stimulus money, and how much is it going to be, and are they going to base it on your 18 return, and should I file my 19 return because it's going to be different than 18. Again, what we know so far is that it's for a married couple, the threshold is anything over AGI, which is pretty much the front page income on your tax return, is $150,000. Anything over that, you're not going to get any payments. For a head of household, it's $112,500, and for a single person, it's $75,000. And if you have dependents and they're on your return, they will not get a rebate because you're claiming them as a dependent. You'll get the $500 rebate for them. And for the married couple, it's $2,400. It's $1,200 for each spouse. And then obviously the individual and the head of household, for each one of them, it's $1,200. If you did not file a 2018 or 2019 return, you need to get those filed. Otherwise, you're not going to get a stimulus payment. There are some people that do not have to file returns. For instance, people that collect Social Security and that's all they get, and they're not filing a return. Apparently, the IRS said they will use the SSA, their Social Security Administration 1099, to issue them rebates. And however, if they want to file a return, it's a no income pretty much, and they'll get into the system, and they can do that as well. And really what this payment is, it's an advance of the special 2020 credit. So if the credit exceeds the rebate, in other words, if if there's a difference and you should have gotten more rebate, then when we do the 2020 return, all of that should be reconciled on your next tax return on 2020. We don't know yet, however, if you're going to need to repay. So in other words, if you filed on 18 because your AGI was lower, knowing that 19 was going to be higher and you waited, we don't know yet if there's going to be a reconciliation to say, well, you shouldn't have gotten it because your 19 was higher. We don't think there's going to be a repayment, but time will tell on that one. If you have on file with the IRS your direct deposit information, they will automatically send it and put it into that bank account. Hopefully it is the same one that you've used on your return before. If not, it will be mailed. But from what I gather is they are going to send you a letter within 15 days of your payment. So you should know about when it's coming, and I don't know if there's going to be any information about where it's going to be sent or how it's going to be delivered to you. But that's kind of the nutshell of the stimulus payment. What another big thing is for retired people is that are collecting their RMDs, which is the required minimum distribution that you are supposed to take when you're 70 and a half, or after you turn 70 and a half. They're allowing you to skip the RMD for 2020 if you don't need it, and you will not get a charge. You will not be charged a penalty for not taking it for this year. There also is, for anybody that pulls out an IRA when they're less than 59 and a half, they generally get a 10% penalty on whatever they withdraw. Well, the IRS is waiving the penalty up to $100,000 of coronavirus payouts, and the fund will need, whatever you pull out will need to be repaid within 3 years, and then it will be treated as a tax-free rollover. Otherwise, the tax will be spread out over 3 years. It's a little confusing, but if you have to do any of that, if the IRA is the only place you can go, to help with your bills or whatever, then I would suggest kind of reading up on what all that entails and to make sure that you're within the guidelines. And if you need help with that, you can certainly reach out and I can help you navigate that. For employers, there is some tax relief. The employer can defer payments of their 6.2% Social Security on wages that they paid from March 27th to December 31st. And then half of the deferred amount would be due on December 31st of 2021, and the other half is supposed to be due on 12/31 of 2022. A self-employed can defer up to 50% of the self-employment taxes. There is a payroll tax form. It's called a Form 7200, and this is for an employee credit to help pay for some of the payroll taxes. And you go to the IRS website, and if that applies to you or if you need help with that, it's a Form 7200. Oh, the filing season is, and some people don't even know that, but the filing season has been extended to July 15th for the federal. And so any taxes that were due on the federal are due on July 15th, as well as filing the tax return. And if you need to make any estimated payments to the IRS, the first one is due July 15th, and the second one is due June 15th. They're moving the first one to July and keeping the rest of the payments as such. So, like I said, the first one's due July, the second one is due in June, the third one is September, and then the fourth one is in January. Illinois has extended the filing season to July 15th too, but they are not as forgiving for estimated payments. So if you have to make a quarterly estimated payment to the IRS, that is due on April 15th, so you have a couple days to get that in, and then their payments go, the second quarter is in June, the third quarter is in September, and the fourth quarter is in January. And their filing season, yes, it does end in July as well, and you do not have to pay your 2019 taxes until July. But if you have to make estimated payments, then they go as if it was, regular season.
Barb, can I ask a question? This is Debbie.
Yes. Yeah.
Okay, so what I'm hearing you say is, for the federal government, if I had an estimated tax payment due April 15th, I could
Yes.
pay that up to July 15th. But
Yes.
my June 15th is still due on June 15th.
That is correct.
The state of Illinois is not giving us any break on April or June.
That's correct.
Okay,
Only,
thank you.
only to pay, only if you owe for 19, they're giving you till July 15th to pay 2019.
Right, the tax, but not the estimated.
That is correct. That is
Okay.
correct.
Thank you.
And keep in mind, speaking of the deadline for July 15th, if you cannot get your tax return done and filed by July 15th, then you will need to file for an extension so that you have until October 15th to file. There are a lot of taxpayers who are waiting for various K-1s from trusts or partnerships or corrections from brokerage statements and so on and so forth. So just keep in mind that if you cannot get your return done by July 15th, you still need to file an extension for October 15th. And that also applies to if you're making your SEP contributions, your self-employed pension contributions or the like, if you're not able to get your tax return done by July 15th, then you need to file an extension so that that extension will also cover your SEP payment, your retirement payment.
So
And
can
that
I,
also, yes,
I want to just say, I apologize, I want to just ask again. If okay, so I filed my taxes,
yes.
but I haven't made my SEP payment yet. Do I still have to make that by April 15th?
Yeah, I think so. I don't know, but I would file an extension. I would file an extension anyway. And
Okay.
even though you got, technically the SEP is, if you have to have your SEP paid in by the time you file your return or a valid extension. So if your tax return is filed and your SEP is not paid, then I think you need to pay your SEP.
Okay. Okay, thank you.
Okay.
So, Barb, just to clarify, as far as SEP contributions, IRA contributions, what is the deadline for that?
The SEP contribution is always the date your tax return is due or a valid extension. So right now for a SEP, that is July 15th.
And what about for traditional IRAs?
The traditional IRA is July 15th. And you also have until July 15th to fund a HSA, a health savings account. That is chiseled in stone, the 15th. So if you can't get your return done by July 15th, you need to have your IRA done by then. And then you can file your return later, but the IRA has to be by July 15th. And that's a Roth or a traditional, one, either or.
All right.
Make sense?
Yeah, and I had muted everyone. I'll go ahead and unmute all. Does anyone have any questions for Barb?
Yes, I do. This is Martha Herrera. Hi, Barb. Going
Hi.
back to the stimulus check that you were talking about, I have a question that I'm not sure what the answer would be. I have already filed my 2019 tax, and so I'm wondering, is the government going to base themselves on the 2018 tax returns or the 2019? In my case,
You know
I'm saying,
what?
Yes, go ahead.
It all depends on when you filed and when they're going to hit the button to make the calculation. Okay, and so my guess is that if you filed it, early in February, it's probably going to be based on 2019, not 2018. But if you're filing like, now or soon, or at least in the next month or so, it will probably be based on 18. I don't know how they haven't said when the cutoff is. And
Okay,
it's probably-
yeah, I haven't heard that either, yeah. I
Yeah,
hope
they haven't.
Paid themselves in 2019, yeah. In 2018,
Yeah,
I had to pay, yeah, okay.
I'm sorry.
In 2018, I had to pay quite a big amount. In 2019, I was almost even, yeah.
Okay, because, well, it's based on your income. It's not necessarily based on your, well, you know, what you owe them. But so if your income, if you're a single person,
Mhm.
if your income was over 75,000 in 2018, okay, and
Yes.
your income was less than that in 2019, and they go ahead and do the stimulus by 18 rules, well,
Mhm.
then when you go to do your 2020 return, there'll be a reconciliation to say, hey, look, you know, my 19 was less than my 18, so you owe me money. But
Oh.
if it's the other way around, if, you know, you had too much money this year in 19 and they based it on 18, I don't know if you're going to have to pay it back, because it's really in advance of the 2020. It's really in advance for 2020.
I understand.
Yeah.
Yeah. Okay. Yeah. I'll just wait. Yeah. In 2018, I make more than 75.
Yeah.
Mhm.
Yeah.
All right.
Okay. So then, all right. So the IRA has to be done by 7/15. But again, have mercy on your broker, because they're gonna be inundated. So I would say start planning, if you're gonna do it, to do it early, July 15th or July 1st, I should say, and and make sure that you have plenty of time to get the money in and and get all that stuff together. Then for people, there's a couple of the stimulus laws, we call it the EIDL. It's EIDL, which is the Economic Injury Disaster Loan,
Yes.
and loan advance, and also the PPP,
Right.
which is
The payroll.
plan,
Mhm.
and then also the employee retention credit, and that's the one that I said before about going to the IRS and filling out the 7,200. But a good website to go to is the SBA.
SBA.
At the SBA.gov, and it has all the information you to get the for the PPP. You can apply through your bank to get that, and then the employee credit that you file on the IRS website. And another new thing that came out this year is the RMD. Before, it used to be, it was ingrained in all of us that when we were 7 and a half, we had to start taking out of our IRA account. Well, that has increased to 72. And anybody that was 70 and a half in 2019, they go by the old rule. So really, anybody that was born January, February, March, April, May, I don't know, May, and they go by the old rules. They had to take their RMD out in 2000. If they didn't do it, they would have had to have taken the first one by April 1st of 2020, and then the next one at the end of 2020. But with the new thing of if you have to take out an RMD and you don't need it, and then you're not required to take it out in 2020, and there's no penalty.
Oh, okay.
Yeah, that's a little confusing. And then,
That will be from. Okay.
regarding, and this kind of hits all of us with making donations and things like that to Rotary and other various organizations, that if we don't itemize, and we are supposed to be taking our RMDs, you take a look at doing what they call a QCD, a qualified charitable deduction, and you'll be able to reduce the taxable portion of your IRA. You give it to charity, and since you're not itemizing, it's not going to affect your income tax, your itemized deduction, and it will lower some of your taxable income.
Wow.
So, you know, and again, if you need any help with any of this, because I said this is like, right now it's like drinking from a fire hose, you know, trying to get all this information to everybody, and everybody's in different phases and things that are apply to them and don't apply. If you need any help, you know, I'm more than glad to go over anything with you, or give you websites, or give you some information to, you know, help you get through all that kind of stuff.
Thank you, Barb. Thank
Barb,
you.
correct me if I'm, oh, here, hold on. Can you hear me?
Yes.
Yes.
Okay. Correct me if I'm wrong on this, but I've had clients who've come to me who are under 59 and a half, and they're like, oh, I heard that, you know, I don't have to pay a penalty if I need to take out early for hardship. You know, my understanding is you don't have to pay the 10% penalty, but you still have to pay the taxes, and it gets added to your gross income for the year. Is that correct?
Are you speaking of for this new tax law, or just in general?
For this new tax law, I've had a couple of clients who've come to me and said, you know, I heard that I can take out money from my IRA and I don't have to pay anything. And I'm like, I don't think that's correct. I think you don't have to pay the 10% penalty right now if it's coronavirus related, which includes furloughs and things like that, but you still have to pay the tax on it from a traditional IRA, and you still have that added to your gross income for the year.
Yes. Well, I don't know if they'll put it, and again, I think they're not going to put it in, I don't think they're going to put it in 2020. I think they're going to spread it out, because you have 2 years, you have 3 years to pay it back. So if you say you're going to pay it back, you know, and you don't, then I think it's going to get added to your income.
How long do you have to pay it back? I didn't hear that.
Half needs to be paid. Wait, when did I say here? Whoops. Wait for it. I wanted to say you know what, Jody, I'm sorry. I lost it here. I was thinking you had 2 years to pay it back, and it was half. No, I'm sorry. That was something else. That wasn't for the IRA. I'm ignore that. Right now, I don't know. And what I can do is I can get you the answer, and I can send it to you, and then you can forward it on to all the participants.
Yeah, I think it would be great if you can put together a little cheat sheet with some of this information that we could post with the video afterwards. Get that over to Debbie. Would it be you or Hunter, or?
Whatever works best, Hunter or myself, whatever helps.
And then we could post that as just a side by side with the video. So if anybody wants to go back and review the information, it's there for them.
Absolutely.
Are there any other questions? This has been very, very helpful today. I know I've learned a little bit, and I get a lot of notifications, but I learned a few new things today too.
I did.
Sorry, Barb. What about, are we going to anticipate that a lot of these loans are going to be forgiven for these small businesses, or is that kind of the prevailing wind, or are they going to be loans that they'll be very, very generous terms in repayment?
They're going to be generous terms, but I've heard that like some of the first 10,000 is kind of a grant where you don't have to pay it back. But some of the others is lower interest rate than, let's say, if you went to borrow off your mortgage, or you put on a credit card or something like that. It's through the SBA, and they're going to be lower rates than like I said normally, or what we have right now.
Mm-hmm.
Okay, thank you.
Okay, the 10% penalty on pre-age 59 and a half payout is waived up to $100,000 of coronavirus related payouts. Funds repaid within 3 years are treated as tax-free rollover distributions. Otherwise, taxes spread over 3 years.
That's pretty generous.
Very generous, right?
Have they said anything about our property tax? You know, for Cook County folks, we're going to get a bill usually July 1st, that's due the end of July. Have we heard anything about that?
I have not heard anything about the property taxes, but Illinois is not. The fact that Illinois, like Massachusetts, is struggling. So I don't know that. I don't know that we're going to get any breaks on that.
Okay. Just curious.
Oh, and if you're filing taxes in other states, you need to make sure that you know what their
Filing date.
deadline. Because not everybody is conforming to the IRS. So just be aware if you're filing in another state or something like that. Don't assume.
Thanks again, Barb. Just for anyone who's listening on audio only, if you have questions for Barb Vondra, you can reach her at 630-327-8202. Again, I'll repeat that. It's 630-327-8202. And her website is www.bjvondracpa.com. Thanks again, Barb.
You're welcome. Thank you. Thanks for the opportunity.